The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon. Ooh, how about that? How about that? I have lost the voice. Good afternoon from TFNN. Welcome to the March 22nd wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance without a voice Rhodes out there, but I'm going to do the best that I can. And I know that each of us should always be pioneers of our future versus prisoners of our past. Unfortunately, you're going to be locked up in prison with this voice out here. So may not have the same energy on the outside, but on the inside, I guarantee you it is there. So I'm grateful for your presence here. And more importantly, though, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. Of course, internationally, 727-445-1044. You can send me an email, steve@tfnn.com, and inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow trading down 57 points at 20,610. S&P is off 2 points at 2341. NDX 100 up 17 points. She's trading out at 5349. NASDAQ Composite up 4 points, trading at 57.97. The Russell 2000 is the stinker in the group. That's off 11 points, trading at 13.35. That must mean the financials are doing poorly today. Yeah, they are because of the waiting inside of the Russell 2000. Semiconductors, they're up $5. Gold is up 3. Silver is flat, trading out at 17.55. Light sweet crude is back 38 pennies, trading at 47.86. Leading the chart here to the upside, you've got FedEx Corp up a couple of bucks, Amazon up a couple, Duluth Holdings up 240, Google's up 2, Insight Corp up a nickel. I think I might need to reset that screen out there. Maybe it's not exactly correct. And to the downside, looks like TransDigm Group off $9, Mohawk down 3, Frontier Communication off about 5, Nike down with 23 million shares. That's off nearly $4. Simon Property Group down 4 as well. So got the first request out here from Bob A. in the Tiger's Den. Bob wants to take a look at the GDX. Bob, are you in the GDX? Not in the GDX, looking to get in, so on and so forth out here. But let's go take a look at it while maybe he populates my screen out there with the answer to those questions. If we take a look at the gold vectors ETF out here, he's not in it yet. Okay, so what's holding you back? What's holding you back, my friend? Well, if we take a look at what's holding the GDX back, perhaps, it's dealing right now with a most recent swing point out here. The trading session is March the 16th. Volume there about 61 million shares. We've done about 32 million shares so far today. So pushing up with pretty decent volume out here. And if it's able to close above that high with volume, beating 23.45, then you'd have another confirmed A to B equals CD to the upside inside of it. Where would that take price to? If we take a look at the small one out here, the small one would say a price objective of all the way back to the highs. The 1 to 1.272 A to B equals CD, 25.45. It'll take you right back to the previous little doji high out there on February the 8th. But what you and I know, most of all, is if we take a look at the GDX, number one, it has the most bullish bottoming signal. Yeah, God, man, boy, haven't been talking all day today. You can tell for good reason out there. But the has the nicest bottoming signal that you can find in technical analysis, and that is the island bottom out there. So it's a significant bottom. You want to find some other significant island bottom, just go look at JP Morgan out there. You'll see a real significant island bottom. We have the same pattern here. Until that gets taken out, the chart remains bullish out here. Now, if we take a look at just some profile information for us, you can see it's traded right up into the center of the box on the weekly, 2361. It's only gotten up to 2356 today. You will take notice that this weekly box has a structure that is a bearish bias, meaning that sellers are the ones that should be in control from 25.35 down to 20.71. Now, the importance there is if, in fact, if and when the GDX is able to take out that level of 25.35 and stay above that level, then you will have another significant message of a change in trend inside of the GDX out there. So if you're not in this, you're looking to get in this, and the question was, where should I get in this? The answer would be, I have to go find a different chart. Let me go put this out here. Let's put up the GDX out here on the daily chart. And the answer would be, if you were fortunate enough for price to move down and test Stevie's red line, that number is 22.59. That would, in essence, be a buy area. Now, you got 22.59 on that chart, and you have 22.56 as the top of its daily box. So if you were to get a pullback, Bob A, and you're looking to get in, that would be the area. As long as price is pulling back into that range with lighter volume, you might say, what's lighter volume? I'll say anything less than 150 million shares out there, because that is the day. That is the day of March the 15th out here. So hopefully that assists everybody out there with the GDX questions, the nougat questions out there, and so on. Of course, the real key is somebody's asking the question, hey, how come gold is not just cruising to the upside out here with the Japanese yen just getting crushed? Well, when I say getting crushed, I mean getting stronger. All right, if we take a look at this chart here, what it is doing, what it has done thus far, it's taken out a significant level of support, that being the TAS weekly profile. Now, this is a weekly. It's only Wednesday. So the number you want to be watching come Friday is going to be 111.67. What we do know is that, in fact, it's taken this level out. Now, this could be an A to B equals CD to the downside to set up a Gartley buy pattern, but it won't do that for a while. That A to B equals CD pattern could give you a price projection out here. Just the 1-to-1 is going to give you a move down to 108.43. I would say, based on the way we've seen price move over the last 2, 4, 6 days out here, that's not where this will stop. It'll go target 106.51, maybe 104.07 out there before it tries to find a bottom. So the question is, hey, why is gold not moving? Remember, it's a directional type move. If we go pull up the chart here, let me go do this. Let me go find it. And that's going to be the yen gold 10-minute chart out here. I know I've got it somewhere in my system. It probably just says yen gold bond 10-minute correlation. There we go. And we open this up. Here what we're going to see is, it's just a directional correlation. For the most part, the dance steps, the Fred Astaire dance steps are still in play out here. You see one red candle you see on the top on the 10-minute chart. You see one on the bottom for yen futures. Now we've switched over to yen futures and taken a look at this. That way I've got live active data out here. So really everything is in sync out here. Remember, it's a directional play. It's not a pip for a tick, so to speak, out here. But all looks good. All looks really good for gold. Looks really good for silver. If we go ahead and I didn't want to do that necessarily. Where did I put that chart? Oh, here it is. If we go take a look at silver, well, we'll have to do it when we get back from this break. Yeah, see, my ears, I can't even hear the music to know that we're supposed to go for a break out here. This is Steve Rhodes with TFNN. We'll be right back, folks.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So Tim writes in and says, Steve, is there any chance that yesterday or today was a bottom in the market? So let's go investigate that. And Tim just wrote market, so that's a pretty wide area for us to take a look at. But let's we can look at several markets out here. So we'll do it like this. Let's start off by taking a look at the equity futures contracts. I think that's the easiest way to do that. We'll look at it on a daily basis out here. And as we do that, you're going to really focus on the three of these panels out here. And we'll come back to the Russell 2000. But the upper left-hand panel is the daily contract for the ES Mini. It shows you both daily and weekly market profiles on there. Daily are in blue, weekly are in green. The NQ is in the upper right-hand corner. Same thing, daily. You've got the green and the blue profiles, the daily and the weekly. Same thing in the lower left where you've got the Dow. Now, what you're going to notice in each of those three panels out here, you're going to notice that price has tested and rejected thus far and has held the bottom of the weekly profile. Now, those of you that are market profile aficionados, which basically each of you are, right? We've gone through this between John Logan and myself. I think we give you a ton of information to help you understand the beauty of these things. When I say beauty of these things, I mean beauty of these things. Now, if you just focus on the green ones out here, right? This is the weekly, so the weekly are going to be stronger, supposedly stronger than the daily, have more meaning, let's call that. And we can see here that the bottom of that market profile, which is at 2336 inside the ES Mini, strong support. Now, we say strong support because that center of the box isn't in the center. It's down towards the bottom. It's at 2352. So this tells us that in this price area, this 2397 to 2336, it really is buyers that have control of this price area. So what I would say, Tim, is that from a short-term standpoint, the conclusion that the market has found a short-term bottom, yes. Could this be a longer-term bottom? Could be. Do I believe that it's a longer-term bottom? No, I do not. I just believe that the market has found support where it was supposed to find support, and it's just really bouncing around. A lot of energy used yesterday. It's just bouncing around. Now, what will change our opinion on this? Or first, let's go take a look at that was the ES mini. The NQ, the same out here. And probably the NQ, we have to really pay attention. If we turn off price here and just look at those profiles, you can see, maybe you can't see, so I'll make it easy for you to see. I'll just simply turn off of the daily ones, and you'll just see just the weekly profiles. See how inside that box, right? We can see that this has got a structure, a bullish structure out here. So as long as price stays above the bottom of that profile from a weekly standpoint, again, that being 53.33.90 out here, anything is possible. You know, if you can't bust them down, you try to bust them up. If, in fact, price is able to get back inside the daily box. So far, it's only been a test and a rejection. That is 53.67.90 out here, which would also be 53.69 is the weekly center of the box. If price is able to get above that, you know, a larger retracement is likely to form. It would actually add, Tim, to your conclusion that maybe yesterday, today, could have been a bottom out here. Now then, that forces us to go try to figure out what's going on underneath the covers. When I say underneath the covers, that means let's go take a look at some intraday charts out here. So as we take a look at the 30-minute panel for the NQ, we know a couple of things. Number one, the market made a top the way we like to see the market make a top, with one of your favorite patterns in mind. It's where price moves higher, it does with less relative energy. Why is it one of our favorite patterns? Because it's basically called virtually every major top that is out there in the marketplace, longer term. And when I say virtually all of them, I'm talking going back into the 1896 time frame. Now, at the bottom here, we can see that as price made a low at about midnight last night, 11:30, 12 o'clock, 11 o'clock, which really wasn't until 11:30 when you got the bullish signal out here. Actually, you did. You got a hammer candle. So as price was pushing lower, and that was the low, right? Hammer indicates on a 30-minute basis market trying to form a bottom. When you see this pattern form out here, it says, okay, we should see a short-term bottom. Have we seen a short-term bottom? Absolutely. Now, what's it go and do? Goes ahead and makes a seventh wave move, letter G, on my system out here before it starts to move back lower. As it starts moving back lower, what does it do? It goes and it tests Stevie's red line. 53.45.46 is the print on it as we speak right now. If price gets below that, it'll go back and test the bottom. It'll go back and test that hammer candle, at least get down to 53.32 out in the market, but would likely go back and test the low of that hammer candle. Now, here's the key with regard to what is the market done with its little counter trend rally out here. Right now, the answer is yes. Why do I say yes? Well, if you take a look at the price oscillator, that is the bottom portion of my screen out here on this 30-minute basis, you can see we're still below zero. We're below zero. We've got a seventh wave move. Not until we see that seventh wave get taken out and we see this price oscillator move above the zero line can we suggest that it's anything other than a counter trend rally. We could suggest anything we want, but I'm not going to. I'm going to tell you what it is when we take a look at the technical tools inside this market. Now, that was a 30-minute chart for the NQ. If we take a look at a 2-hour chart for the NQ, we're going to see that price is well below that zero line on its price oscillator out here. So this is even more damaging. When we take a look at the 2-hour chart, here's where these market profiles really assist us. You can see that the bounce that took place inside the NQ ran into resistance right at the top of that 2-hour chart out here. That price level is 53.66.80. Now, price certainly was able to get above it, but you and I are really concerned with the body of the candle, where the open and the close is out here. So price was able to get above that area. Now, the price oscillator has turned up. So the key level, in order for the NQ to start heading lower, is going to be to get below 53.40.90. I would say really to get below the lows of late last night out here, but it would go a long way to get below 53.40.90. This makes a seventh wave move as it makes its top yesterday. You know, an ideal pattern inside of the market. So that's the NQ on the 2-hour chart out here. And if we look at the 5-hour chart, excuse me, I've got to get some water. Thank you. Price does what? Price this morning runs right up into Stevie's red line. You can see the bottom panel price oscillator below zero. Who's in control when you're below zero? The sellers, the bears. Nothing more bearish than a falling price oscillator below zero. How do we know if it's falling or not? Hey, when you get up and test Stevie's red line and you reject it and then you start trading lower, I can guarantee you it's falling. It's just mathematically impossible to do anything else other than fall. So on a 5-hour chart, on a 2-hour chart, on a 30-minute chart out here, it is the bears that are the ones that are really controlling price. When that changes, then maybe we can change our outlook out here. Inside the NQ on a daily chart, where is price headed to? Well, the very first level is going to be Stevie's red dashed line out here, and that's at about 51.23 out here, and that is where I believe the NQ will actually target. Excuse me. Okay, so let me see, what else do we have out here? It says, well, I'll have to read this as we go into the breakout here. This is Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
welcome back, folks. Dow's off 31. S&P is up a point, and NDX 100 up 22. So I mentioned earlier how some of these patterns are just simply our favorites, and they're our favorites because they've been working basically forever out here. Here's the historical chart for the Dow. I'm not taking it all the way back to 1896, if that's okay with you. But how about if we just simply take it back? Whoops, that didn't work real well. How about if we take it back into the 1920, 25 area, 1929? Now it's a monthly chart, and this is a very cool pattern, in my opinion, because I sort of stumbled upon it when I was searching for something else. You guys have heard this story before. I was searching for astro dates, celestial dates, celestial aspects that formed at or near market tops, and to see if I could find something that was consistent out here. And the reality is I couldn't. But what I did find that was consistent was that all these market tops did the same thing. They stretched themselves in such a way, and the parameters that I use are different than just kind of a normal, using the normal relative strength indicator out here. So I went ahead and programmed it. Spend a lot of money to do it because it's important to be able to see this happening on the fly, because it works in all time frames out there. So whatever you're trading, you want to be paying attention to this. And so if you go back to, we talk about those seventh wave moves here. If we take a look at just coming off of the 1926 March area, when the Dow makes its high back in September 1929, you've got wave number 7 out there. That's why we pay attention to wave number 7. Price moves up, does with less relative energy. The bears show up. Here's Stevie's red line on here. You see a black line. We're not going to go into that as we speak right now, but it's great for long-term planning. It debunks the BS that's out there that says you can't time the marketplace from a long-term standpoint. Those are just people that make their money, make their 1% or what have you out of keeping you inside the marketplace. It's just simply not true, not even close to true. It's so far away from true, it pisses me off. But that's neither here nor there. So you can see you've got that nice little market top. If we just kind of fast forward through here, you're going to see another one form back in September of 1937, as the market is making a top out here. If we just I'm going to just come to, here's a time period here. This is in 1966, in February of 1966, as it makes a nice little top out here. We know the top that was formed back in, and this is why you really need to pay attention to both Stevie's red line and the reversal candles out here, because it's just really key to be able to put this whole thing together to identify real tops and ones that are just, maybe the information's not exactly, it's real, but it's not a real top that's out. Here's January of 2000 inside of the Dow as we take a look at it, and it formed its top here is, again, we're looking at a monthly chart. Here's November in 2007. This is important. So where are we now today? Because the question is always, Steve, isn't it possible that this is a major market top that's out here? And I say only if this pattern that basically calls every major market top has just simply failed. It hasn't. No. Are we at a major market top inflection in the marketplace? Not even close. I mean, not even close. Now, you might say, how in the heck can you say that with such conviction and such a crackly throat out there? And I would say that's a good question. The crackly throat just comes from, catching a cold out there, which that pisses me off even more. Can I say pisses me off out here? I think I can. I have now 3 times. But so why do I say? What would be one reason? Well, I would say we're not even close to forming a major market top. Well, one of those reasons would be just simply the pattern that has worked before in the past, going back as far as you want, isn't present. It's not present inside the Dow. Now, this is a historical chart, so don't pay attention to the fact that this shows 20,934. In order to have the historical data, I can't have it merged with all the live data out here, but I can tell you, even if I do have it merged with all the live data out here, you're not going to see this pattern present at the moment. And then someone says, okay, all ears. Why not even close? Okay. How many of you believe that the market has moved higher because of the Federal Reserve. Do you think that has the Federal Reserve had any impact on the on its bond purchase program, which basically is taking debt off of banks so that they can, put money into? How many believe that QEs out here and so forth have impacted the market? I'm going to raise my hand and say yes. But so here's the deal. And this is, so you might ask yourself the question, and I had this conversation with a friend of all of ours out here not that long ago, which was, why was Warren Buffett and his group buying Apple up at the highs out here? Why was he buying it in the 100 plus range, 120 range? Why wasn't he buying it back at $89? Right? Back in May of 2016. Now, in May of 2016, who did you think might be the president of the United States? Now, it has nothing to do with regard to the individuals. How about the party that might retain the office or might take over the office out here? Here's one of the things that we know. And I got this data live. They just got in just before we went on the air out here from and I know the data is solid. Very solid. And they're coming out with new data in about a week. Although I think they sent me the updated chart out here. This chart here, this little spreadsheet, this shows you the amount of trillions of dollars. Now, that's broken down by company, the amount of cash that is offshore. So if we take a look at what this administration is promising to do, which is to have some type of deal with the corporate tax situation. So this doesn't even factor in the corporate tax situation. This and repatriate funds that are held overseas. Now, and by the way, Apple has their float gotten higher or lower over the past several years? Exactly. Their float has gotten lower over the last several years. They've been buying back stock and so forth. How logical do you think it is that Apple is going to bring back some significant portion of the $215 billion out there? That $215 billion, if they're taxed at 10% on that, so then they've got about 89 billion, something like that, to do for programs such as buyback stock or whatever they want to do. And how about that? It pales in comparison to some of the buyback programs that are out there. So to me, that's one of the reasons. That is the reason. Hey, Buffett's not he's an intelligent individual out here. He's just a probability guy. Pfizer has $193 billion offshore. Microsoft, $124 billion. GE, $100+ billion. IBM, $68 billion. Merck, $59 billion. Google has got $59 billion. Johnson & Johnson, ExxonMobil, $51 billion. Look, this whole thing here, these are all basically large cap stocks, obviously. Boy, it had to be a rocket scientist to figure this out. This is I believe this data is as of 2016. And so you got $2.5 trillion. Folks, the Federal Reserve only added $3.5 trillion over a long period of time. This is going to happen like overnight when it happens out there. We are so not close to a significant market top. This is Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So one of our wingmen in the Tiger's Den, two of them actually, bringing to our attention that back in 2003, 2004 timeframe, I believe it was, when we had one of these repatriation impacts out here, and at that stage it was approximately 362 billion that came back. Of course, bull market, no question about it, that was going on during that time. But we have a bull market that's going on now. Now that was 360 billion versus there's 2.5 trillion. No, not all of it's going to come back anyways, and there's going to be some tax implication, but a substantial majority of it, and in like a one fell swoop. Now, it's not all going to go towards buying back stock. Some of it's going to go out for dividends. Some of it's going to go into expanding operations or what have buying, buybacks, buybacks of stock, buyouts of companies. I mean, just a flurry of activity, all things that have only but one impact on the stock market. And that is to the north. It's probably going to just blow our minds. Now, of course, if it doesn't happen, is that a problem? It probably is. But at this stage here, we have to go with what it is that we know. We know that it's on the table. We know that they're going to work hard at trying to get that done within the next couple of years out here. Now, you folks will like this. I've got an email here from Alex, AG inside the Tiger's Den. And he says, Steve, I can hear you, but can't connect due to a bandwidth issue. So he says, am I wrong that I can't see anything long except maybe gold, and that may be. He says, I've got blank percentage of my portfolio short, EWW, RYH, and the XLK. Appreciate your educated answer out here. So, Steve, so this time is different. No, I don't think this time is different at all. Not even close. I think this market, and the Fed has got this thing so figured out, so wired, that it's amazing. I mean, if they wanted to start, reducing their balance sheet, they'd be able to actually do that. Because bonds are going to go higher. I don't even care if they raise rates for the next couple of years out here. Bonds are headed higher. Long-term bonds are headed higher out here. But let's try to answer AG's question. No, I mean, are there things that you can't be long out here? Well, he put the question mark with regard to gold, and we really covered that for the most part. I think the most important chart for gold really is both gold price in dollars and euros. And both of them right now are breaking out above significant resistance levels. So we know that the yen is getting stronger. That's positive for gold. We could see gold breaking above a long-term trend line. Now, when I say long-term trend line, I'm just really going back to 2016, August 2016. We're seeing that gold priced in euros is getting back inside its original uptrend line out here. There's just nothing but a substantial bullish case to be made for gold, and therefore the mining equities and silver and so forth. So I know you're questioning that. It's always good to question everything, but right now what we're seeing take place in front of us is exactly what you would want to. You're seeing the ideal. Situation that suggests that metals miners should head higher out here. If we take a look at the XLK, let's just switch over to a different chart out here, and inside the XLK, just try to identify where maybe that might pull back to. And where that would pull back to, where I would target it as we put this out. First, let's look at the patterns out here and take a look at why AG, who's climbing, who knows what altitude he's at. But yesterday, AG, what the XLK did was it formed a seventh wave move out there. So, and it was also price moving higher, doing less relative energy, and it was a key reversal session. So you had everything. Now, what has occurred inside the XLK is it has come down to its daily profile. So let's go put the XLK up here on this screen. This is going to give us better profile information, both daily and the weekly. We'll go ahead and populate out here. So we can see that it came down to the daily. The weekly, so where the XLK is likely headed to is going to be the bottom of a brand new weekly box, by the way, just formed this week, and that's at 51.76. So your target on where the XLK heads to is 51.76. And not that it can't get below that. If it does get below that, then we'll try to figure out where the next possible spot is. But that will be the initial target out here. You also indicate you are short EWW. So let's go take a look at EWW, and that is going to be the iShares Mexico capped ETF, which, of course, you've got to go figure out what the holdings are inside there. So as an example, new partner links. Let me turn this thing off here, and it's EWW. So in order to really trade the EWW, it would be helpful to know where America Mobile, that's a cell phone company, that's about 13% of the holdings. Formento, Econ, GPO Financial, CEMEX, GPO Mexico, Grupo Televisa, Walmart of Mexico, Deutsche Bank of Mexico. So, you know, the top 10 holdings represent 59%, 58.37% of the entire ETF out there. So it would really be helpful if you're trading this to go take a look at those individual stock charts, because I think they will provide us with better information, quite frankly, than the data coming off of the ETF out here. Nonetheless, what this does suggest to us with regard to your trade out here, I'm going to switch to a different chart so I can go ahead and actually pull this up and see what other patterns might be out here. So give me a moment to do that. The pattern that we're looking at on our screen out right now, AG, is showing us it's got a brand new TAS daily profile that formed today. So not until you see it close below 49.43 is that going to suggest to you that you're on the right side of the trade out here. Not that you're on the wrong side. Excuse me. Ugh. God, I kind of hate that. What I hate is the real scratch on the throat out here. So 2 minutes can't go by quick enough. Now, AG, and I don't know if this is how you came across the short out here, but it's exactly how all the tigers in the den would have said, hey, look how smart this guy is. If we take a look at coming off of the low out here, that low, by the way, sorry about that, folks, too, January the 12th, and you start counting the waves on the way up. Yesterday, seventh wave move, bearish engulfing. Z, I tried that last night. Didn't seem to work real well. It felt pretty good, but it didn't exactly work the way that I'd hoped that it would. And so what you also need to see inside the EWW, Stevie's red line, so it still has a rising price oscillator. And what that means is that you want to see it close below 49.45 to confirm That being short, that is the correct move out there. So you got a topping pattern, absolutely. But just be careful. There's nothing else that has indicated that it's ready to get roasted and toasted to steal from the great one out there. So the last one is RYH. So let's go take a look at RYH and see what this looks like out here. RYH is the Guggenheim. Oh, you got to love the Guggenheim. That is the Guggenheim equal-weighted ETF for the healthcare sector for the S&P 500. And if we go try to take a look at it and look for patterns, excuse me, folks, I just don't make this stuff up. He's got a seventh wave move out here. You got to love that. Maybe it's not. Maybe I just have the eighth wave turned off out here. But I will tell you the RYH looks pretty good. Target AG about 153.69. Steve Rhodes with TFNN. Be right back.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI, oil, and sugar, in one powerful CD. With no pricing caps, you could potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with hosts Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So welcome to the first retracement of 2017. We probably end up with 2 of them, 2 to 3. If you just simply go back and look at the S&P 500 historically, you're going to see that we have retracement periods in the strongest of bull legs, and we certainly have a strong bull leg now. What we don't know is whether that retracement, so to speak, I say it really began on March 1st versus Fed Day. But either way, what we're looking at is likely about a 5% correction, maybe more, but a 5% correction takes us back to the 2281 level, 10% 2160, and all of those would be nice buying areas out here. You really want to make sure that you've got the gunpowder ready to load up when we get there. How long is it going to take us to get there? I don't know. I think we'll see a pattern. Which pattern is it that's going to show itself? I don't know. It could be this pattern here, where I really take a look at the work of Martin Zweig out here. And this takes a look at his Zweig thrust indicator. And as of yesterday's close, you can see we were at a calculation of 0.46. The blue line on the bottom is the 40% level, and the blue line on the top is the 0.618 level. It's actually 0.615, I believe, is the exact number that he uses out here. But the New York Stock Exchange tends to form significant bottoms when this advanced decline indicator, and it's totally different than other tools that we use to identify this information. When it gets down below the minus 40 level, right around that 0.382. Does it work all the time? No, but it works so often that you just simply don't ignore it. Just like you and I don't ignore the minus 150 level of the McClellan advanced decline oscillator reading out there. So we're not there yet, but we'll be there soon enough. Whenever that's soon enough, maybe a couple of days, maybe a couple of weeks out here. But that's one of the things that we'll be looking for. We might see an A to B equals CD to the downside. That would be a Gartley buy in some of the indices out here. So there's plenty of things for us to look for. And I promise you we'll be doing that. We'll be doing that, for subscribers for sure. So I just think at this stage here, everything is signaled to us that yesterday's low was not, I repeat, was not the bottom inside the marketplace. Whether we bounce higher today, move somewhat sideways or so, no problem. We should look at the Russell 2000, right? Because that certainly is a weak link out here. Let's do it by taking a look at the IWM before we go ahead and shut down the show here and bring our favorite polar bear on. If we take a look at, yes, Mr. Z, and I guess I should pass this on to Alex, who's listening, probably more important as well, because he's short the XLK. And at the close yesterday, what Apple did was it confirmed a TD sequential signal, gave you the actual signal the day before, and then yesterday's close was the confirmation, as well as price moving higher, doing less relative energy, bearish engulfing, hold on yards. This would say to me that if Apple's going to continue to pull back, the 133 area is a price range I would be looking at. I'd also be looking at the market profiles inside of Apple. Inside the IWM, it is right now trading below its weekly profile, that being 133.89. Any close below 133.89 this week says there's a change in trend that has taken place. Now, what the IWM will first do is probably go target the breakout area, which was on 11.11. And that's going to be in the range of about 127.72 or so. So, folks, stay tuned. Thanks for putting up with my crackly voice out there. I'm going to go try to repair it. That's going to be a lot of fun. Who's buying first? Steve Rhodes with TFNN. Take care, folks. We'll see you on terrific Thursday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.